5 years returns, which is around 17.94%, almost 18% of returns. These are yearly returns, right? In the last 5 years, this ETF has generated. This data is as of end of December 2024. The semiconductor and semiconductor equipment by 15% and so on and so forth. AI boom in 2024 has made Nvidia world's second most valued company. Nvidia had a market cap of around 1.2 trillion US dollars by the end of 2023, and this valuation went up to 3.28 trillion US dollars by the end of 2024, which is almost 2.75 times increased in the valuation in just 1 year alone. Now, some of you might be wondering whether this AI is a hype or whether this is actually giving any ROI on AI investments or not.
AI
hype cycle.
What you see on my screen is the management commentary by world's largest semiconductor company, TSMC. And what this company is saying is that using AI, this company has gained around 1% in their productivity, converting it into 1 billion US dollars of saving in terms of the real money. Now you might say that, Rahul, you are cherry picking the data here. I absolutely get that. That's why if you look at this article where a survey was done with 2,500 global leaders, as per this survey, 74% companies generated ROI on their AI investments. But more importantly, 86% companies were able to increase their revenues by almost 6% using AI. So the data is telling us that AI is not just a hype, it is definitely increasing the value for companies who are investing in AI right now. Now, if you're an investor and want to invest in AI related themes, this video is perfect for you, because in this video I'm going to speak about 3 ETFs that invest in AI companies as a broader theme. You won't find this content anywhere on YouTube, so get ready for the massive learning in the next 10 to 12 minutes. Before I speak about AI ETFs, in my view, 2025 is a year when upgrading yourselves in AI tools, technologies and strategies is no longer optional. This is because people who are building AI skills today will no longer need to wait for good career opportunities tomorrow, because good career opportunities will automatically knock at your door provided you are building AI skills in 2025. Where to start from? Growth schools, hands-on AI training that will teach you more than 25 plus AI tools, how to sort complex data in Excel, how to build smarter business strategies using AI, how to build your personal brand using AI, how to find jobs and build salary hike strategies using AI, and much more. This hands-on AI training is usually a paid one, but for the first 1,000 people registering using the link below, they are going to get it absolutely free of cost. You will find the link in the description and in the pinned comment, so go and register now. Lastly, whether you are in marketing, sales, finance, tech or freelancing, this AI training is for everyone. So using the link in the pinned comments, grab your offer now. With that, let me now take you to the first AI ETF. So the first ETF is AIQ, which is Global X Artificial Intelligence and Technology ETF. So first of all, what is Global X? So Global X is a member of Mirai Assets. All of us know Mirai Assets. It's a South Korean asset management company. We are all very much aware of Mirai Assets. So it's a reputed ETF in my view. Now, if you look at the past returns of this particular ETF on my screen, you will see the last 5 years returns, which is around 17.94%, almost 18% of returns. These are yearly returns, right? In the last 5 years, this ETF has generated. This data is as of end of December 2024. If you look at since inception, which is this ETF started in 2018, this ETF has delivered around 16% returns in the US dollar terms. So if you speak about rupees, because rupee has been depreciating in the last 10 years or so, if you look at the rupee wise returns, these returns are likely to be much higher than what you're seeing on my screen, because the returns you're seeing on my screens is based on the US dollars. Also, please understand, past returns does not guarantee you the future returns. There is always a market risk. It does not guarantee that you are going to get these returns, but at least we need to know how much of returns the ETF has generated in the last few years. Now, AIQ is a global ETF. Please understand this, very, very important, because if I talk about where this ETF is investing, this ETF is investing in companies all across the globe. So for example, here they have invested in companies that are based in US, almost 70% allocation, followed by China 8.3%, Ireland 3.8%, Canada 3.5%, and so on and so forth. This data is as of end of December 2024. Now this ETF is listed on Nasdaq exchange, which is a US exchange. I hope you know that. But more importantly, importantly, this ETF is a passive ETF. It tracks an index called Index Artificial Intelligence and Big Data Index, very popularly known index in the world of AI and big data. And this index, as of November 2024, was tracking almost 84 companies all over the world. Again, I'll show you the list of the companies as well. The total asset under management for this ETF is around 2.48 billion US dollars. So it's a huge fund. It is not a small fund. Again, the data is as of November 2024. This ETF gets rebalanced every 6 months. So there will be companies that will be discarded from the ETF. There will be companies that will be added into this ETF based on this index, because it is a passive index. The expense ratio is around 0.68%, which is not too high in my view. Now, what you see on my screen is the top 10 holding of this ETF as of 6th of January 2025. You will note that number 1 is Tesla, 4.49%, Broadcom, 3.89%, ServiceNow, Netflix, Salesforce. These are some of the companies that this ETF has invested. But one thing you will note here is that unlike many other ETFs, this ETF is not highly concentrated on one or two companies. As you can see, for example, Nvidia is only 3.28% here, while you will find many other ETFs that have high concentration in one or two companies like Nvidia, Apple, etc. Now comes the million-dollar question: how does this ETF actually selects company for investment? So for that, have a look at my screen. You will see broadly two categories. So if a company falls into any of these two categories, category number 1 is any company that is doing AI development or any company that is selling AI as software as a service. And the second category is where companies are working in AI hardware space or quantum computing. Now, there may be a lot of companies that are falling into category 1 or category 2. It doesn't mean that this ETF is going to invest in all those companies. In fact, they have a selection criteria. So what is the criteria? Company's market cap needs to be more than 2 billion US dollars if they are in category 1, and more than 500 million US dollars of market cap if they are in category 2. They also have conditions like the average daily turnover needs to be at least 2 million US dollars of trading in terms of the value of the trade, right, in both categories in the last 6 months. Also, they look at few countries that they have narrowed down, for example, US, Canada, Taiwan, South Korea, and so on. So there is a strict criteria that this ETF is following because it is a passive ETF following a particular index that I talked about. Now, if you look at the industry exposure of this ETF, you will see that it is exposed by around 40% to the softwares and services industry, followed by semiconductor and semiconductor equipment by 15%, and so on and so forth. Again, you can see this data by yourselves. Just pause the video, have a look at this sectoral breakdown as well as of end of December 2024. Now, if I talk about valuation and profitability as well from a price to earnings perspective, 2023, it was trading at a PE of around 38. By the end of 2024, the valuations have cooled down. It has come down to 28. From a price to book value perspective, also the value has come down in 2024. From a risk perspective, if I look at the beta, you will see that it is slightly more volatile than S&P 500. So it is 1.25 times more volatile than S&P 500 from a beta perspective. Nasdaq 100 almost 1.07. So all in all, this ETF is more volatile than the mainstream indexes, mainly because this is a sectoral or a thematic ETF. Now comes the million-dollar question: Rahul, what are the options to invest in this particular ETF as it is listed in the Nasdaq exchange? So there are three options. Number 1 is you need to have a demat account with a US broker, which is based in US, investing in US securities. Number 2 is that you might need to open an account with an Indian app that facilitates investment in the US. Third option is Mirai Assets Global X Artificial Intelligence and Technology ETF Fund of Fund. So what this fund of fund does is it takes the money from Indian investors and put this money into the ETF that I just spoke about. So that also is an option where you won't need to open a demat account with any US broker or do not need to have an account with an Indian app. So third option is for purely Indian investors. I've given you a lot of information about this particular ETF. If you have further questions, let me know in the comments. But a humble request to you is please do not take this as a recommendation. My intent here is to tell you the investment options that are out there and give you some data backed analysis. Please do not take that as a recommendation. In fact, if you like this analysis, hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. Also, you can consider joining my YouTube member community because I post almost on a daily basis about various assets including stocks, mutual funds, ETFs, and many other assets. The feedback of this community has been excellent. You can simply go to my channel and press on join button, or you will find the link in the description or in the pinned comments. With that, let me now walk you through ETF number 2. The second ETF is ARKQ, which is ARC Autonomous Technology and Robotic ETF. So this ETF is an actively managed ETF rather than a passively managed ETF, and it is managed by Cathie Wood's ARK investment firm that you might be aware of. Now, this being an active ETF, also please understand the geographical concentration of this ETF is more concentrated in the US. So for example, have a look at this screen, you will see that more than 90% of their investments are based in North America, only 7% in Asia Pacific. So as compared to the AIQ that I spoke about in the previous section, this one is more concentrated in North America. Now, a few basic details about this particular ETF. Because this is an actively managed ETF, the expense ratio is slightly higher, 0.75%. The fund's overall asset under management are slightly lower. It is around 780 million US dollars as compared to more than 2 billion US dollars we saw in AIQ. Now, if you look at the past returns of this ETF, in the last 5 years, it has managed to give yearly almost 14 to 15% sort of a return. And since inception, it is around 12.57%. This is in absolute US dollar terms. But if you would factor in the rupee depreciation, these numbers will be slightly higher than what you see in terms of the US dollars. Now, as of 6th of January 2025, have a look at the types of company this fund has invested in. This is Tesla at number 1, almost 15% of net funds into Tesla. And this is why I said this is more concentrated ETF versus what we saw, which was more diversified AIQ fund. This one is definitely more concentrated. Tesla is around 15%, followed by many other AI and robotic companies. You can see the list here. Top 10 listing is on my screen. So in terms of technology, where is this ETF investing in? Have a look at my screen. You see autonomous mobility around 45%, battery technology around 11%, intelligent devices 10%. So this is more like a futuristic sort of a ETF is what I can see in terms of the technology that it is investing in. If we read the objective of this fund, it clearly states that their objective is to invest at least 80% of their funds into domestic and foreign securities, which are into autonomous technology and robotic companies. That is where the company is focusing on. Unfortunately, I could not find the valuation data as well as the risk data for this ETF. But if I manage to find it later on, I am going to add the notes. So make sure that you are also checking the pinned comments or the descriptions of this video, because I don't know when you're watching this video. Hopefully, I'll be able to find that data as well, and I'll add that into the notes as well. So far, if you're with me, request you to hit the like button while I move to ETF number 3. The third ETF that I want to cover is an ETF called BOTS, which is Global X Robotics and Artificial Intelligence ETF. This is also from Global X, backed by Mirai Assets. Now, coming back to the difference between BOTS and AIQ, the big difference between them is that BOTS follows a different index altogether. It follows an index called Index Global Robotics and Artificial Intelligence Thematic Index. That's why you will see a big difference between AIQ and BOTS, although they both are from Global X. Now, let me walk you through some of the differences and also some of the key insights about this particular ETF. Point number 1 is the geographical investment breakdown. Have a look at my screen. You will see United States here is only 53%, while Japan has got the second share, which is around 26% of the investments in Japanese companies, followed by Switzerland, Finland, and so on. So this is much more diversified from a geographical perspective as compared to AIQ. Now, second point is that because this is a passive ETF, very much similar to AIQ, this one also has expense ratio of only 0.68%, but the number of holdings you see here is only 46 versus I think around 80 plus in AIQ. So this is much more concentrated when it comes to the number of companies that particular index holds. Assets under management slightly more than AIQ, around 2.6 billion US dollars. If I now speak about the past returns of this particular ETF, last 5 years it has managed to give around 9.48%, which is lower than the AIQ. Again, please do not take past returns as the future predictions. Have a look at few other important parameters of this ETF, but overall from a past returns perspective, it has given lesser returns than AIQ. Now, if I speak about the top 10 holding of this ETF as of 6th of January 2025, you will see Nvidia has got the maximum allocation of around 14%, then followed by Intuitive Surgical almost 10%, followed by many other good companies here. But again, you will note here that one company has got quite a high concentration because the way index is constructed is very different from what we saw in AIQ. Also, the selection criteria of the companies in this particular ETF is very different from AIQ, and that is why I'm presenting you these flavors so that you can learn more. And if you're learning, please like the video, right? Coming back to how this particular ETF selects the companies, it looks at themes like industrial robots and automation, unmanned vehicles and drones, non-industrial robotics, artificial intelligence. So these are the themes that if a company is operating in, it is becoming eligible. But again, this is not the only criteria. There is another filter criteria. For example, the minimum market cap needs to be at least 300 million US dollars, must be listed in the developed market like US, Japan, Switzerland, and so on. Again, you can read these criteria. These are the strict criteria that the ETF follows before selecting a company into this ETF. One very important point that I want you to understand about this particular ETF is the volatility. Have a look at my screen. You will see almost last 8 to 10 years of chart here. It is highly volatile ETF. Huge downturn here, followed by a massive peak post-COVID. Again, a huge drawdown, again followed by a uptrend here. So this is a hugely volatile ETF, and it is not definitely for short-term traders. I would not like to time any of the ETF investments. ETFs and index funds are mainly for long-term wealth generation. And if I really show you the data as well, have a look at this data, you will see from a beta perspective, it is highly volatile. 1.51 times S&P 500. From a Nasdaq 100 perspective, 1.23. Again, if you compare this data with AIQ that I spoke about earlier, this is a more volatile ETF as the data suggests. From a valuation perspective, 2023, it was trading at a PE of around 50. In 2024, it has come down at around 39. From a PB perspective, again, it has come down 4.54 in 2024. But the PE and PB ratio is still on the higher side if you compare this with AIQ. Finally, I could not find a fund of fund that is feeding into this particular ETF. So the only option to invest in this particular ETF is either using a demat account based in US or having an account with an Indian app that facilitates investment in the US. So in this video, I've covered a lot of details about these three ETFs, and in my view, that would have given a lot of good knowledge about investing. You would have got upgraded from your investment approach perspective as well. And if you want to upgrade yourselves for AI career related skills as well, please check out Growth School's hands-on AI training that I spoke about earlier. The link is in the description or in the pinned comments. Grab your seat now. Only first 1000 registrations are absolutely free. I hope you enjoyed this video. If you did, press the like button. Let me know in the comments a simple thank you. I'll see you in my next video. Until then, keep rocking.